You still have 10% left, and if the market starts acting very well, you can put that 10% in a triple leveraged and get your S&P exposure up to 0.8, which is somewhere where we would like to be under ideal situations when you're above the 8, you're above the 21, you're above the 50, and you're above the 200. And speaking of exposure rules, this is the rule on the S&P 500 in a healthy market. And again, this is something that we've back tested, and a correction in a bull market typically stops around the 20-week or the 100-day moving average. So the situation, it happened a couple of times during the last uptrend before this prior bear market. If you look at a weekly chart of the S&P, you see it bouncing between the 100 and the 150-day, actually on a weekly chart, the 20 or the 30-week. So we don't want to bail on the market. We want to maintain this core exposure unless the market really starts breaking down. And by breaking down, we're going to break the 200-day moving average and then actually more than 2 ATR below the 200-day moving average. Usually, if a correction is going to be short-lived, sometimes you hang around that 200-day moving average. It's when you get the hard break below the 2 to 3 ATR that you really want to be out of the way and considering shorting any bounces into moving averages. But that's a whole separate discussion. Now, the Easy 8 system that I talked about, this is Hood. This is a current chart of Hood from January to August. We've been fortunate enough to be in this. Most of the time we got into it back around here. But this light purple line is an example of how these leading stocks, this is, if you said, I want to get a leading stock, what's the textbook picture of it? It would look something like this, where they just continue to ride the 8-day exponential moving average up higher. Eventually, it'll break the 8 EMA, and when it does, that's a change in character for the stock, and you should act accordingly. That's the time to lock in profits and maybe leave a runner if it goes down to the 21 or the 50-day. So this is the holy grail of strong stocks in an uptrend during a bull market. This is what we're looking for on a chart for them to act like. This is an example of, not an example, these are the actual trades that we made in our portfolio in Growtection, starting with, you can see that here's the tariff tantrum. So I talked about how we want to get out of the market, right? Breaking the 200-day moving average. That's the black line on here.